Good. Good morning, good afternoon, and good evening, wherever you are. Welcome to our next episode of Masters of Product. Our topic for today is actually how to go from Google to angel investing. And for that, we actually have Tom in our studio. Tom has over 20 years of product management experience. He was a PM at Microsoft. Then he joined Google in 2006 as a PM for Google Analytics and was leading Google's first transformer-based AI product. And he built that from production to scale for the healthcare industry in 2022. He's also a 2X exeter founder, so lots of experience in building products all the way from 0 to 1 and then taking it from 1 to 100. And today, he has now put all that behind and has turned into an angel investor. He's also a product strategy consultant for corporate innovation initiatives and an executive coach. I am so glad to have Tom on the show. As for me, my name is Mustafa Kapadia. I actually help product teams use AI to be more effective and efficient, and you can learn more about it at echo-point.com. Anyway, Tom, welcome to the show. You and I we've talked several times, and I love the arc of your story. I love the direction that your career is going. And I know today is a little bit of different type of episode because in most of our episodes, we talk about the impact of AI on product management or the impact of AI on industry. But with you, we're going to talk about the impact of AI and other things into the world of investing.
Yeah, I can't wait.
Looking forward to this. So thank you for joining.
I appreciate you having me, Mustafa.
This is good. Tom, if it's okay with you, why don't you actually just kind of share your story? Because I think your story is fantastic, right? I know I did a short intro and I probably didn't do enough justice. So just tell us how you ended up from being a PM at Microsoft to now being your own angel investor.
Yeah, well, I think one theme that kind of summarizes my career so far is I love variety. And so I've worked in so many different areas. I mean, as an example, I'm an advisor with UC Berkeley's Skydeck kind of accelerator program. And every month or so, we have advisor calls where we talk about the portfolio companies and, who has experience or connections in this area or that. And I realized oh my God, I'm raising my hand for someone that's doing recruiting tech. I'm raising my hand for someone that's doing health tech. I'm raising my hand for someone that's doing media, ad tech. I've just been around. And
Perfect.
I think so I'm always trying to mix it up. And I think part of that is I think of myself as a lifelong learner, and I get a lot of energy from going into different areas and solving problems I haven't seen before.
Yeah.
And so my transition from product management into angel investing is angel investing had been on my bucket list forever. And so I never previously was never at a point where I thought that was possible. And, now luckily after a long kind of stretch of lucrative work, I can do that a little bit. And then also there's some innovation in how investing works where you don't have to be writing 100K checks to participate in the angel ecosystem. With SPVs, you can invest as little as $1,000 and, you are technically an angel investor. So because of the accessibility through, special purpose vehicles and, me meeting some other financial goals that I had set in the past, my wife said, okay, if you want to burn this amount of money, go for it. And so I said, great, let's do this.
I like I said, I love the story, and you're absolutely right. I think part of being, I guess, a good PM and a good investor is just to be curious about all these different things and learn a whole bunch of different things, right? Actually, it's probably one of the reasons why I enjoy being a PM, or even why I'm doing the things that I'm doing now, is because it's just a new high, if that
Yeah.
makes sense. I actually want to go back to what you just said, right?
Hmm.
Listen, Tom, you were very successful at Google, right?
Hmm.
But something in you said, you know what? I want to now make that leap of faith into investing.
Hmm.
And I'm sure, like you said, the thought has been around for quite some time. It's not like something that you do in a knee jerk reaction. So I'm curious, what was that moment? And you're like, yeah, you know what? I think I'm done, and this is my new life. I'm curious if you had that moment or not.
Yeah, it wasn't necessarily one moment in time where I was like, "Oh, I no
Yeah.
longer want to do my current
Or maybe a
role."
bunch of moments leading up to, like,
Yeah,
the straw that breaks the camel's back.
yeah. So, like, some of the key s milestones on the way to where I am now is, I think one of them was I hit, my 10-year anniversary at Google,
Oh,
and I
that's
hit
big.
that in around 22. And so I was like, "Oh, as much as I love what I'm doing, and it was very lucrative, um, I
Google
did
is very
feel,
generous, yes.
yeah, it was like I'm starting to see like the same types of meetings, and I'm doing the same types of things, and it wasn't as new for me. And also, I think I was like, well, every year that I'm here, I'm not able to do other things.
Yes.
So there was a big decision on my part to decide to kind of do other things. And I had done that once before when I was first at Google in
Mm,
'09, after a few years in, earlier Google. And that was because I wanted to start a company and I had never done that before.
yeah.
And then this time I was like, I want to do other things, and I want to kind of open the aperture quite wide. And so
Mm.
I was actually contemplating all kinds of pursuits, like even, which is kind of crazy now given the state of current events, but I was thinking of maybe even working in the federal government on digital innovation for
Oh,
Gov.
wow, yes.
Yeah. And was very close to accepting a role in the Presidential Innovation Fellows program as
Oh, wow.
as a supervisor for PIF fellows.
That's super impressive, because I know a few people who have actually doing that, and they actually like it. They love
Yeah.
it, right?
I think it's a great way to give back. And at that time, I had some other opportunities I decided to pursue, but I was very close to doing it. But that just gives you a
Wow.
sense of, like, I was thinking very YOLO, like, um, would an 11th and 12th year at Google really be a big thing? Um, and then what also happened was we did a bunch of restructuring and at the company, and the timing worked out such that I was like, "Oh, okay, like this is could be
It's
like
gonna work out
helpful."
in my favor, yes.
Yeah. And so, I had a long tenure at the company, and at that time with, restructuring severance deals, it was partly based on how long you've been in the company. I was like, "Oh,
Yes.
this is pretty good." So, then during this time after I had left Google and I was pursuing some other things, I started reading, and
Mhm.
there was one book by Jason Calacanis called Angel, and it was all about angel investing.
Yeah.
And he's a very convincing salesman, and so he was like, everybody should do this. Like, it supports the country, it supports society, da, da, da. And then he's like, I'm gonna help you understand how you can get involved for as little as $10,000. And I
Wow.
was like, "What? How is that possible?" And then, he was basically talking about like AngelList SPVs and things like that.
Yes.
So I was like, well, maybe I'll set aside some amount that I'm okay, not seeing ever again. And so that's when I had the conversation with my wife. And actually, I think we were on a long drive, and I was listening to the audiobook, and she was like, "Hey, maybe we should do angel investing." And I was like, "That's a great
Oh.
idea." So yeah, that's a little bit of the journey to how
Yes.
we got to where we are now. And it's worked out well enough that we're kind of doing a little more than we thought we would.
Nice.
But I'm optimistic.
Yeah. No, it's good. And by the way, you crossed two big paths, right? Number one is how to leave Google, and that was the restructuring helped you. And the
Hmm.
second path is you have to convince your wife.
Yes.
Two very different stakeholders, and those are not easy, right? So,
Yeah,
uh,
I mean, you are gambling, and as much as you try and put structure and due diligence and
yeah,
theses around your activities, the statistics are that most of those bets will not pan out, and that's money that you could have spent on property or a
yes,
nicer retirement
yeah,
or
yeah,
a bunch of other luxury items that you could buy or whatever, or just savings.
I agree. When we started with real estate investing, this is a while back. I had to convince my wife a lot,
Mm.
right?
Well, that probably worked out okay for you guys.
It has worked out in some cases, yes. In some cases, not so much, but I think that's on that's on par with any kind of investing,
Yeah.
right? Um, I want to talk about your strategies. I want to talk about without you, whatever you feel comfortable sharing about your returns and so on and so
Hmm.
forth. But before we go into that, I want to get one more, and I love asking it. And I was thinking about this. Do you remember the first deal that you invested in? I'm sure you do.
Yes.
Can you share that with us, or can you?
Yeah,
Is that
yeah.
okay?
I mean, I'll it's still in the portfolio.
Oh, good.
Um, so it's an interesting one because my earliest uh action in angel investing initially was built on a premise that as a product leader, I have a good nose for
Mhm.
a good product.
Yeah.
And um I think what I found over now, I think I've made over 20 investments now. But
Nice.
over the course of those investments, I think I've realized, like, yes, the product is definitely important, especially as it relates to a measurement of the team's ability to execute.
Hmm.
However, trying to figure out if this is the winning product at generally a very early stage is sort of like predicting, well, will this embryo eventually win the Rhodes Scholarship 20
I
years from
know.
now? Like, it's so hard. There's going to be so much to happen between now and then. So but the first investment I made was actually in the healthcare space because I had worked at Google Health for 4 years,
God.
and one of the things that I was super excited about when I was at Google Health was advocating for more proactive, preventative, value based primary care. And
Interesting.
so there was a startup that I've invested in that goes after this area. So I was like super enthusiastic about the problem.
Right.
And then the investment deck and the investment memo was very compelling. Um, and so the only reason why I kind of like, I'm not sure how that's going to pan out is like, it's it's not growing at the rate that you would want. Um, it's certainly not at the rate that it was growing before I invested,
Mm.
which goes to show you, like, any venture can show great month over month or quarter over quarter growth, but there is a chance that every subsequent quarter gets harder and it
Yes.
won't necessarily hold up or accelerate even. Um, so but that was my first one. It's still a
It's
going
still there.
concern. Yeah.
Yeah.
So we'll see. And I've talked to other angels for whom they tell me, "Oh, my biggest return was from some startup that I initially was like not even sure about, and it just blew up.
Yeah.
And all the ones that I was deeply convicted on, went to zero. So it's hard to say, like,
You just never know, right? This
yeah,
is the
well,
whole point. You plant a lot of seeds.
Yeah,
Oh,
you're totally
yeah.
you're totally putting a lot of, chips down on a lot of numbers. We should do this interview in 10 years, and then we can figure out like, oh, well,
And
what
then you can
what
tell
was
me,
the
yes,
what was the magic formula?
yes. By then, you may not even want to take my call. You're like, I don't want to talk some stuff. I only want to talk to people who are going to make me 10x what I make. That's
Well,
fine.
you just send me a link to this interview and be like, remember you promised to do 10 years from now? Yeah.
um, all right. So let's talk about your philosophy. So let's talk about your investment philosophy,
Hmm.
right? Um, every VC I talk to, every angel investor I talk to has a point of view of where things are going or certain themes that they look out for,
Hmm.
right? And then based on those themes, they make certain strategic investments. Um, so I'm curious, what are your themes? And more importantly, I want to know like the why behind the theme, if
Yeah.
that's okay.
So when I started, I actually didn't have a thematic approach, and mine was a competency approach. My
Okay.
my original investment thesis was, oh, as a seasoned product operator, I can suss out talent, potential product fit,
Right.
market opportunity in a way that's going to be stronger than pure kind of
Yeah.
financial investors.
Right.
And I still think that's a arrow in my quiver, but it's not central to
Mm.
my current approach. So, and why is that? Well, part of it is like, okay, you're good at evaluating things, but there's so many startups out there, you don't
Yeah.
have time to evaluate all of them. The second thing was I think I've been convinced of the thematic approach in terms of like mega trends
Mm.
because I think it allows you to invest in companies that have a lot of tailwind, where
Uh,
even if they kind of like don't get it right the first time or they struggle with some execution, they don't have to nail the landing for them to do really well. Whereas if it's like a shrinking or flat
yeah.
opportunity, they really have to do everything perfect.
Yeah. I mean,
So,
rising tides
yeah,
rise all boats, right? And so you
yeah,
want to be on the right, you want to be in the right market, or at least with the right forces pushing you. So you can get a
yeah.
lot of things wrong and you can still make it.
Yeah, and I also think that when you have these mega trends or themes that you have conviction in, irrespective of the company, um, what happens is then when you make that investment, you generally feel way better about it because you're like,
Yeah.
oh, I believe, like for one of my areas is robotics. Like I just believe that we're going to see probably 10, 100,000 times the number of
Yeah,
robots in life, in the next 10, 20 years.
I agree.
Um, another theme.
I've been waiting for a robot to come clean my house for
Oh,
ages.
yeah.
Yeah,
I
trust
just
me.
invested in one a few months ago that cleans bathrooms, commercial bathrooms, like airport bathrooms, office
Yeah,
bathrooms. But that is not like a fun job. Um, it turns out like some of the robots, I think, do a better job than the humans. The robots
of
don't call
course.
in sick.
Yeah,
They can be monitored. They're
they
very,
can clean more frequently. They can
yeah,
there's a
totally.
whole bunch of things that robots can do because I'm a big fan of. I mean, a Roomba is not a robot, but
But yeah,
when it
I've got
first
one
came out,
working right now. That's
yeah,
Thank God for my Roomba because I have a yellow Labrador Retriever and dark wood floors. Like that does not
yeah,
work without a Roomba. So robotics is a theme.
got it.
Nuclear energy is a theme.
Hmm.
And then highly verticalized SaaS is a theme. But there's also some where, and then AI
Yes.
in general.
I think
But
AI kind of is a threat with all of these themes, right? It's not
yes,
just AI on its own, because
yeah,
I can see AI, but not just see. I've seen AI embed into robots and into. Well, I'm not sure about nuclear energy, but at least with the vertical SaaS. So
yeah, no, and I think part of the reason why robots will be able to kind of go a lot further than they have in the past is because they will be able to use AI to kind
Yeah.
of improve their activities.
Or
So
even communicate, right? Natural humans to communicate with robots, right? As
yeah,
much as I love my Roomba, pressing buttons in a certain coordinated way to make it do something is annoying,
yeah,
right? And you have to use a mobile app for that. I mean, it'd be
yeah.
great if I can just talk to it.
Agree. So, and my Roomba has a little camera. It should be able to recognize all kinds of things, and it's pretty good
Yeah.
at recognizing basic things. But that's just gonna, um, get better. And I cannot wait till my Roomba can clean my stairs. That's the one thing that it does
Oh,
not do a good
yes.
job. But I'm
Yeah.
sure that'll come.
I want my
So
Roomba to clean my kids. I don't know if that's what that's
yeah, so the only other thing is there are times where something is not perfectly in a theme, but you just got to
Yeah.
do it. So actually just a few days ago, I made a small investment in a company called Atom,
Mm,
ADAM, and it does AI powered computer aided design. So rather than like you literally do it by prompt, like design
yeah.
me a rectangular box that can hold 4 wristwatches that have a lid on top. Okay,
Nice.
now increase the width of
Perfect.
the wood or whatever, and
Yeah.
it'll just do it right in front of you. It's sick. Um, and then you can output it like as an STL or whatever file to then do your final tweaks in SolidWorks or whatever you use for CAD. But that's an example where, well, it kind of fits within the AI theme, but that AI theme is so broad it could apply to everything
It
these
can
days.
apply to anything.
But it
Yeah.
was also one of those things where I was looking at this deal and I was like, well, that sounds like a great concept. Does it really work? And then luckily as a product person, like I'm very eager to try it out. And so I
Yeah.
sign up for a beta account and I'm like, "Oh, this is not just vaporware. Like
This is real
I'm
stuff.
using
Yeah.
this thing right now." And then the other thing that happened was my son, who's a junior in high school, for many years was on the competitive robotics team as
Oh, wow.
a designer doing the CAD stuff for the robot design. So I said, "Hey Ryan, like check this out, man. Would you use something like this?" And he was like, "Oh, that would save me so much time. Like
Yes.
we should invest in that." And then the other thing was there were some social signals or market signals. It's a YC company. Um, they had already raised a lot of money, so I was kind of pouring money onto something that has some momentum.
That helps, right? Especially if you're
So
new. Yeah.
yeah, you're like, okay, I like this space. My son has done CAD before. He thinks it's legit.
Yeah.
I played around with it as a product. I know they've actually built something. I tried to break it. I couldn't easily. I'm looking at all the other investors who are putting money into this. Yeah, sure, let's go for it.
Do you do directly with the company itself, or do you use some kind of platform?
Yeah,
How
so
do you actually do that?
2/3 are through these special purpose vehicles, these SPVs that are via syndicates. And
Okay.
so basically with Adam, there's a syndicate lead, someone who dealt with the company and said, "Give me some allocation into Adam."
Got it.
And then they go on AngelList and say, "Hey, if you, for my syndicate members," and you can join any syndicate you want. I mean, there's some application, but I don't know how
Yeah.
how selective they are, as long as your money's green. So then they put out a notice saying, "Hey, I've got a new deal. It's Adam. Here's the memo on why it's going to be
Perfect.
the next big thing." And then you just decide, and it's like buying a freaking pair of socks on
Yeah.
Amazon. You just
So
put
that
in the number.
helps, right? Because in I was wondering how you actually found these companies and then
Hmm.
how you made the investments. Because I know there are um, some VCs or some angel investors on Angel itself or on Angel List itself in which they are directly talking to these early stage companies. But you're actually going through the platform, which actually helps de-risk some of it. doesn't it?
In theory, because the syndicate lead is supposed to do some due diligence.
Yeah.
Who knows how good they are, but and the other thing is sometimes a round needs a certain number of other angels to participate for it to happen.
Yes.
So if they can't close a round, and because there's only 2 or 3 people interested, then you're one of those 2 or 3, you might have saved yourself.
Yes.
There's trade-offs though. One is there is some adverse selection, which is, well, if you're that hot of a company, why not just take all the money from Andreessen or Sequoia and don't give any of your allocation to some syndicate?
Yes.
So that's one thing. So you're not going to get access to like the equivalent of like Anthropic's like seed round or something like that, right? The second downside is that you pay a carry to the syndicate lead.
Of course.
So whatever you make, around usually 20% of your profit goes back to the syndicate lead.
Syndicate. Yeah.
So
And I'm
that's
sure
why
there's is that the only fee you pay, or you have to pay other fees as well?
there's a management fee of 2% a year as well, which they don't really do any work. So you just assume. So, when you add it all up, like you're basically paying probably for the winning investments around, call it 30%.
Wow.
For access. On the other hand, it's like, well, I don't have time to go to every freaking accelerator demo day. And even if I did, and I go to the founders at Atom, hey, I want to put, even if I increase my number and say I want to put 25K in, I think they're going to be like, look, man, I got people lining up to put in 100K each minimum, and I have some institutional that wants to put in 250 or 500. So it's work.
They just don't have the time. Yeah.
Yeah. So I don't mind. The other thing I've been doing, which I don't really consider it angel investing, it's almost like public equities investing. So I have another set of funds that the wife has approved, where I will invest in very late stage, pretty much pre-IPO companies.
Okay.
And the way that works is sometimes the same syndicates, but there are some syndicates that mainly do this, which is what happens is, let's say the defense tech company Anduril, they are raising another round, and they have early investors like big family offices or even small institutional funds who they kind of want to take some money off the table because it's been marked up so much. So they'll say, hey, look, I have the right to participate in the next round because I was an early institutional investor, but I don't want to put all of my money in. So if you want to put your money in and give me 20% of your upside, then I'll let you. And then it's often also with like some access fee as well.
Yeah.
So I've done a fair amount of that because my view is like, I just have, defense tech is something I'm very bullish on. I just feel like we're going to be changing how our militaries arm themselves, and
very much.
Yeah.
I mean, the fact that you can actually bring in certain themes in which defense tech, robotics, AI, all of that is converging, right? The way the way we're actually keeping ourselves safe or defending ourselves is very important. So it looks like you almost, and we talked about this, right? Seems like you almost have this dumbbell or barbell strategy in which it's very early, in which it's small amounts of money.
Yeah.
And then it's late stage right before IPO.
Yeah.
And that is that because you really, is that just naturally happen, or is that like a de-risking strategy? How did you come up with those two?
Well, the early one it's frankly more exciting because you're like, well, this thing could 100x, but the problem is you have to make so many early bets for it to pan out. One of the things that Calacanis talks about is, you've got to make enough bets to have the power law kind of work for you. That basically, for my early stage bets, I mentioned that I made about 20. I really need to make about 30. And I need to hope that one of the 30 pays for the other 29.
I thought it would be even higher. I thought it would be at least 100.
Well, yeah, it depends on how. I think I'm pretty good. So I'm saying 1 out of 30. And some people will probably be like 1 out of 100 or 1 out
I'm
of
going to ask you the
500.
same question 10 years from now when you take my call.
Yeah. But because of that, you really have to assume all of those 30 will go to zero, which is to say, like, okay, well, that's a very specific conversation with your family about, like, I'm literally going to let this go to zero, and I'm going to be okay with it. With the pre-IPO stuff, it's very unlikely it's going to go to zero. Like Anduril, OpenAI, Anthropic, Perplexity, Figure. Like I'm investing in all of those, and I'm able to do two things. I'm able to increase the size of the check because I feel like it's less likely to go to zero. And therefore, they are kind of two separate funds because you don't really want to, the math won't work if you try to.
I like your strategy. In fact, especially the almost the pre-IPO stuff, because I think that you can write a bigger check and it does de-risk. And it actually helps the other 30 or 20 or 30 that you have, just in case if those go to zero. At least this one's gonna hold you up, right? Or at least make you even. Worst case scenario, right?
And I also think it has a much better chance of producing returns than an index fund for your primary kind of retirement account. So for us, like, my net worth is mostly in a professionally managed retirement account and some property. And then the next thing is the pre-IPO stuff, which is a little more risky, but I don't think it's like that risky. And then we have the super risky stuff, which is the early stage work.
Wait, are you doing this through a retirement account? You making these investments?
No, I have a separate LLC where I've taken money from the retirement account and, back to our original conversation, from some of my severance. And I'm letting it ride
for you.
Yeah.
Okay. Because that would be pretty sweet if you can actually take some money out of your Roth or 401k and then have that grow free, basically.
Tax free. Yeah,
right?
You can. There is a way you can use 401k money. I just haven't. But there is a way to do that. I just haven't. I haven't pursued that.
Okay. Interesting. So let's. I want to stick with the theme, but let's go one level deeper, if that's okay. Right? You mentioned several themes, right? You talked about defense tech. You talked about nuclear. You talked about robotics. You talked about AI. If you're comfortable, can you share some of the type of companies you've invested in? Actually, let's start with nuclear, if that's okay, because that is one topic I know very little about. But I do agree that the way our energy consumption is going, in the future, you're going to have some combination of solar and nuclear, right? And fossil fuel is going to be a third leg.
Yeah. So for nuclear in particular, I haven't invested in early stage nuclear companies, but I have invested through public markets in nuclear companies. So 3 of them are SMR, which is called NuScale. They're all small modular reactor companies.
Nice.
Another is Vernova, which was GE's old nuclear business, which they spun out, and now it's like a standalone thing. And then another one is Oklo, which is like the Altman nuclear one. Nice. So even though you can buy them now, for those, I should disclaim that I'm not giving anyone financial advice. Please consult a real professional before making any financial decisions. But for those,
I was a Lego store. That's what we are.
Yeah. So for those, I was able to just buy them directly, through Schwab.
Oh, perfect.
And so they're just publicly traded companies. But I did invest also in the private markets. It's not nuclear, but it's around energy and climate, which
Hmm.
is Ebb Carbon, EBB. And what they do is they connect with desalination plants and then use some electrolysis to turn the CO2 in the water into like inert um,
Perfect.
minerals, and then return that water back into the ocean without the CO2 so that the ocean can then absorb more CO2 from the air.
Nice.
And then another one called Ionic Mineral Company, which uses a new form of clay to build solid state batteries.
Yeah.
And that one I liked because it's US based. And I think my theory was that America would want more kind of domestic sources of minerals and energy.
Yes.
And so, yeah, and then so for nuclear, the three biggest investments I made actually were in public equities, but I
Nice.
consider that part of my play money because it's not part of my official retirement.
This is great. We actually have a question, and I know we're running out of time, so I'm going to ask. Let's go to the question that we have from
Mhm.
Tom. I'm actually going to show it on the screen. So Tom is asking, outside of well-known incubators, accelerators like YC, and other online syndicate networks, where have you found the most success in meeting startups and the need of angel or seed investing?
The
By the
first
way,
two
Tom, thanks for the question.
Yeah, thanks for the question, Tom. So for the first two that come to mind is I'm an advisor at the Stanford Center for Entrepreneurial Studies as part of the GSB, where I work with students that are working on startup ideas. They're
Nice.
pretty impressive. And then I'm also an advisor for UC Berkeley Skydeck Accelerator, and have met a lot of great founders that way. And actually, just a few months ago, invested in a Skydeck company called Jelly, which
Hmm.
does AI enhanced recruiting kind of capabilities for recruiting agencies. So um, the other way is through my professional network, just people that I've worked with who have decided to start a company. And then the other one is through my podcasts and my content, that a lot of times founders will reach out asking for advice, or, I mean, once you kind of tell the world that you are an angel, like,
People find you.
people want money, man, and so, but yeah, to answer your question, I think some of the universities are a great way because you get to see stuff before. Like, I'm working with some students, like, they haven't even incorporated yet. And I'm like, ooh, when they incorporate, I would like to get in on this one. Yeah.
Yes, I think that's good. Thank you. Thank you, Tom, for asking, Tom. I appreciate that. So we have about 5 minutes, and
Hmm.
already we have only covered three of the questions that we
Yeah.
have. That goes to show the back and forth in our or the banter in our conversation. I'm gonna end it with something. Let's get a bit more practical, at least for our audience, right? And then you and I, Tom, we need to talk separately, and maybe we need to start an investment club. You know, or if you start a club, I'll be the first member. um, in fact, I know a lot of people who would be interested. Um, I know you mentioned some books about how you got started, right?
Hmm.
So I'm curious to see if somebody who is about to get started, how would they do it? Like, what are the books that you recommend? What else do you recommend that they do? Just something that will get their feet wet and get them going in the right direction. Or even things that they should not do. Because I think lessons learned is a big component of this as well.
Okay, so I will definitely reiterate my recommendation of Jason Calacanis's book called Angel: How to Invest in Tech Startups, Timeless Advice. Um, I don't know what the rest of the title is.
There you
From
go.
an angel investor who turned 100,000 into 100 million.
There you go.
So, okay, now one caveat before you read that book is he's going to make you want to start investing. So just know that, like, this is a very pro investing book. And so before you buy that book, you have to ask yourself a few questions. One is, are you prepared to lose all of your money that you're
Yeah.
going to invest? And if the answer is no, then don't do it, because it's like going to Vegas. Like, if I just get my money back, I'm going to feel like it was a good time. So you, that's sort of like, you got to apply Vegas rules to angel investing, in my opinion. The second thing is, um, after you read this book, and the book really does tell you some good advice. One of the things that Jason recommends is like, okay, now you've decided to do it, just make 10 $1,000 bets.
Got
Go
it.
through an AngelList SPV, because you need to go through like the cycle, and you will invariably learn more in those first 10 to then inform your next 20 or 30. And, even in my own experience, I didn't take his advice entirely. I was like, oh, I'm just going to start going a little bigger than that. And so, so, but one of the things you'll realize is, and as a startup founder, I don't think I fully grokked the breadth of startup ideas that are out there being pitched every day, and how it's
There's a
so
lot.
rare to come across a unique one that's really
Yeah.
compelling. And so when you start, part of the reason why they say, hey, make 10 investments, is that means you're probably going to have to look at 100, 200, pitches.
Yeah.
And what you'll start to figure out is like, oh, most pitches are in this like 80, 90%. They're fine, but they're not like, now my position is, I don't make a decision the moment I read the pitch, even though I want to. I let it sit for a while. And if my mind keeps coming back days or weeks later, like, oh man, I really got to get in on that, that deal, then I'll invest. Because
Got
there
it.
are deals where they're like impulsive kind of decisions.
Yeah.
Because in some ways, AngelList makes it so easy that
Yes.
it really is like one click investing. So that would be my practical advice, is like, ask yourself if you're willing to see all this money go away, and then set a number, and then ask yourself if that number will allow you to do at least 30.
Hmm.
The biggest mistake I've seen people make is they're like, oh yeah, I did a little angel invested and it didn't work out. And then I'll ask them, like, how many investments did you make? And they'll be like, 2. And it's like, well, come on, man. Like, that's not going to work out for you.
That's not gonna work. No.
That's like going to the roulette table for about 3 minutes. Like, you're not gonna, you're unlikely to hit your big numbers. So, yeah, that's some practical advice.
Yeah. How do you manage? So I'll tell you about myself. I know the type of investor I am, right?
Mhm.
Um, which is why I'm index funds. um, I do have risky investments too, but I do it in investment funds because I know that I am naturally an optimistic person.
Yeah.
So when I look at a startup, I see all possibilities, right? And so
Hmm.
I'm like, oh, I actually have to like control myself because I'm
Yeah.
like, oh, I can see this, I can see this, I can see this. I think part of it is being a product manager because you can see all the
Yeah.
possibilities. And so
Hmm.
I'm curious, number one, does that happen to you too? Do you get too overly optimistic about certain things? Or if that does, how do you rein it in?
Yeah. So it does happen. And I think PMs, we generally feel like we can roadmap our way into success in any situation.
I agree.
And
And I can teach you how AI can help you do a roadmap. So
yes, exactly. Exactly. So I think the way to address that is, number one, you're not asking yourself, could this product work? You're asking yourself, could this company would be worth 100 times what it's worth
yeah,
now?
yeah. I think it's a very different type of a mindset of a
Yeah.
question, right? Because you are
So
looking at market and you're saying, where is it going? Is the tailwind there? Yeah, I
mhm.
agree.
So I mean, this is a game where you either hit your straight flush or it's not really worth your time.
Yeah,
And so I think as PMs, we're always like, oh, this is a suited connector. It could work. It's like, yeah, it could. But what's the
yeah,
probability of that happening? And so that's usually a function of the TAM, the current valuation, the team, and the traction.
yeah. That makes sense. Because I think for me, I've noticed, and I've done. I'm not an angel investor in any kind, but I do. I think having having a framework about just like how do you look at a company, being able
Hmm.
to answer the questions about the market, the TAM,
Hmm.
the type of talent. I think all of those things help you make a decision, right? Tom, we're almost out of time. Any last words of wisdom? In fact, we're over time, and we've only done 3 questions. um, any words of wisdom to our audience before we part? And we may have to actually do a part two. I don't think so. I can wait till 5, 10 years. I think I need to mooch off your success much sooner. So
Well, so, yeah, of course, of course. I think the only thing that I would share with the audience is, you only have one life to live,
oh yes,
so make the most of it. And most people, when they reflect on their years past, their biggest kind of regrets are things that they didn't do.
yeah,
And so go for it, and don't live with regrets, but do it in a way that you're prepared for all potential outcomes.
yeah. Well, you're teaching to acquire because just like you, I left Google around the same time as you did.
Hmm.
And it was to figure out what I want to be when I grow up because exactly the same point of view. I wanted to make sure I didn't have any regrets. So, but I'm loving what I'm doing, and it looks like you're loving what you're doing, which is really at the end of the day, that's what matters.
Yeah, man.
Um,
Totally.
so perfect. Anyway, Tom, thank you very much for being our guest. Love the show. Love your insights. I am serious about the club. I can line people up. So, um,
Yeah, maybe I'll
yeah,
be one of those syndicate leads someday. I don't know,
there you
but
go.
it's a pleasure reconnecting with you, Mustafa.
Yeah,
Thanks for having me
same
on.
here. Thank you very much, Tom. All right, bye for now and have a great Friday. Yes.
You too.